Brought to you by Raisin UK, the smart choice for savers who want strong returns without the legwork. What's more, for a limited time only, you can receive a £100 bonus when you register and fund your first savings account with a minimum of £10,000 using the code SAVINGS100. For more details, please visit the link below or go to raisin.co.uk/PensionCraft. Welcome to Many Happy Returns, where we aim to make you a better investor. I'm Roman.
And I'm Michael.
What's the next big thing in investing? Venture capital often points the way. Global VC firms poured $126 billion into early-stage startups in the first quarter, and almost 60% went into AI companies.
We look at where the so-called smart money is placing their bets. And in today's dumb question of the week, what is a unicorn? All right, let's get into it. So a couple of weeks ago, Roman, we did an episode about what if AI isn't a bubble? And people seem to like it. We got a lot of positive feedback about that episode. So I thought, let's double down. Let's do what venture capital does. And let's do another AI episode. But this one, more specific. I'm thinking about the early stage companies that major investors are looking at and putting money into right now. But typically, as retail investors, we don't think about startups that often, do we?
No, that's right. And we had a question this weekend when I did the bi-weekly call that I do for members. Somebody said, here's an example of a company where you can invest in early stage AI companies, but you have a huge minimum investment. Is there another way you can get access to this? And I don't think there is. And that's for good reason. You can't invest in early stage companies as a retail investor. Typically, the way we invest is simply to go via a broker and going for a listed company. Now, by the time a company lists on the stock exchange, it's going to be quite established already and presumably reasonably successful. It's got a market capitalization which will probably be in the millions or hundreds of millions or billions. And that's not an accident. That's because those are safer companies in which to invest. A lot of companies in early stages ultimately go bust because setting up a business is difficult. It's really difficult to be profitable, to run things profitably for a long period of time. So really what we're looking at is a market which is out of bounds because of safety reasons.
Yeah, there's a kind of exclusivity, isn't there, around investing in particularly the very early stage startups, where if you pick the right one, the payoff can be huge, right? But you're going to have a high failure rate. That said, there are ways that as retail investors, we can get into private companies. In the UK, we have investment trusts, which are listed companies that tend to buy into unlisted stocks or illiquid investments. And some of these will be betting on relatively early stage companies. We also have crowdfunding, where if you got in and picked the right companies at the right time, you may have been able to make a lot of money. So I think companies like Monzo and Revolut were once funded partially through crowdfunding, and you could have multiplied your money many times had you bought them 10 years ago.
Yeah, the thing about crowdfunding that worries me is that a lot of people bought into these companies, which were then very successful, and I'm thinking about Brewdog here, and yet the people who put up their capital initially are not going to benefit from that huge surge. And there are lots of angry people about that, understandably. In fact, there were a couple of FT articles about this one, and I had a great title for one of them from FT Alphaville, which is Down in One, How Private Equity Swallowed the Brewdog Unicorn. I thought that was great.
Yeah.
Because unlike buying a share on a stock market, you're not getting a slice of the company. Often you're given other benefits in crowdfunding. So that's why I've tended to keep away from it in the past.
There is actually one other way where we will be investing indirectly in early stage startups through holding particularly big tech companies where they are throwing a lot of money at funding rounds for, at the moment, AI companies. So for example, Nvidia invested in 49 different funding rounds for AI companies last year, putting up more than $1 billion, I think. So, if we own Nvidia, which we probably all do through our index funds, then we are in some way investing in early stage companies.
Yeah, I think Nvidia is my biggest holding at the moment because of the fact it's got a huge market cap, 4 trillion.
So maybe we should care then about early stage companies, partly because we indirectly own them, but also because eventually they might become the next big thing. IPO, get listed on the stock market and become part of our portfolios. But maybe more immediately, Some of these startups are going to challenge the business models of the companies that we do own. They're there to disrupt the giants of the moment.
Yeah, I think that's right. And I think many of the industries which you currently have are ripe for disruption. That remains true. So if you are aware of these companies, perhaps you can see a risk to the companies you've already invested in. But for a global index investor, look, all of this is just grist to the mill. It just feeds into the ongoing ecosystem of companies which eventually become larger. And as they grow and ascend up the market cap scales, we benefit from that growth.
I think the challenge is what you hinted at earlier, that it's very hard to grow a company, isn't it? Particularly in those early days. There's so much competition. The big guys are looking to squash you. And raising capital isn't easy. So I thought what we could do is look at one of the most influential startup accelerators in the world, which is Y Combinator. You might hear it referred to as YC. And they've backed many successful companies over the years. Airbnb, Stripe, Dropbox, Reddit, Coinbase, DoorDash, all of those started out at YC. And what they do is provide seed funding, but maybe more significantly, mentorship and networking, business guidance. And then they go through this kind of cohort process where they used to run 2 batches a year, but now it's 4 batches. And it's like a 3-month sprint, which culminates in a demo day. And then these companies try to raise lots of money off the back of that. Now, tens of thousands of companies apply each year, and only a fraction make the cut. And what's interesting is YC puts out a so-called request for startups, listing the things and the topics they're interested in at the moment. And I thought what might be informative is to look at what they asked for earlier this year in their spring batch. And no surprise here, Romin, it was very, very, very focused on AI.
Yeah, look, they're going to ride any trend which is out there. When it was Web 2.0, that's what it was all about. And now, of course, it's AI. And I think this is actually one which is more likely to bear fruit. So these companies were very interesting to look at. And I think I should thank you for wading through so many of them and kind of shortlisting it so I didn't have to look at hundreds. Thank you for that.
Yeah, there was 144 companies that made the cut. And we'll talk about a few of them later. And really just to indicate the trends. Obviously, none of this is a recommendation. You probably can't invest in them anyway. But before we get to that, let's look at this request for startups pitch that went out. Now, I think the most interesting part of it is that they describe 2025 as being the year of AI agents. And they've broken it down into various different sections. And the first one is full stack AI companies. And I think this is interesting because it's a radical departure from the kind of companies that have been successful for YC in the past, maybe. Previously, the biggest companies in the world have been software as a service companies, haven't they? Where they build all these applications and then they can sell them to other businesses to use and then charge rent basically for using their products. But let me read a bit from this idea of what's a full stack AI company. YC says, suppose you believe that large language models are now able to automate a lot of legal work. There are 2 things you might do with that idea. You could build an AI agent and sell it to law firms. That's what most people do. Or you could start your own law firm, staff it with AI agents, and compete with the existing law firms. That, my friends, is going full stack. And you can do this for any industry, especially one dominated by slow-moving incumbents. Instead of selling to the dinosaurs, you could make them extinct. Provocative, as these pitches often are.
Yeah, so I'm going to start an airline. And it's not going to have any pilots. It's going to be flown by AI. Sure, there'll be some issues along the way, but we can iron those out later. What do you think, Michael?
Did you pitch that to YC? I don't think you got into the round. I didn't see that company in there.
Yeah, that one didn't make the cut. I can't understand why. Now, for someone who's a bit of a geriatric, could you explain what an AI agent is?
Yeah, so as I understand it, it's quite a simple idea, which is that it takes a user prompt in English or any other natural language, and then can go out and complete autonomous tasks on the back of that. It's not coming to you constantly for feedback. It's not giving you just small text outputs. It's actually going away and booking a holiday or suing another company if you're this AI legal firm, or going and coding a new part of an app. It's a task replacer and maybe eventually a jobs replacer.
So it's a doer rather than a replier.
Yeah, exactly. And a lot of the companies that made the cut for YC this year are focused on AI agents. So as I said, there were 144 startups accepted in the spring batch, of which 70 are focused on AI agents. And there's quite a lot of duplication there. Companies which you read it and you go, they're doing the same thing. But then I guess that's the game. You've got to back a lot of horses and hope some become unicorns.
Yeah, I love the business model. I love the way Y Combinator works. And I love the kind of creativity that goes into this. Of course, a lot of these companies are going to fail, but you've got to love the optimism, the positive attitude towards technology, and the ability to do stuff and get things done. I love that.
And I like the accelerator model where it's like a deadline. Everyone loves a deadline, right? Well, they hate it, but it gets stuff done. You say, you got 3 months, there's a demo day, you better show something. Sink or swim, right? And I think fail fast is a good thing if you're an earlier stage business.
And what's shocking, just scooting through some of the examples that you shared with me, is how few people are in the company. Often it's literally 3 people or 2 people in the company initially. So they've really got their job cut out to produce this demo. You've got to think, have they already got the code for the demo lined up so that they don't have to worry too much?
Well, they're often technical founders, people who are expert coders and happy to spin up a minimum viable product in a few weeks. Often you'll get a non-technical founder paired with the technical founder. And I sometimes wonder what that non-technical person's doing in the early days. There's no product to be out there pitching. Maybe they're shaping design. And interestingly, actually, one of the other buckets of companies YC is looking for at the moment is design-led companies. Can I read you a bit of this? Because I thought this was interesting. Because previously it's been all about technical skills, but maybe they're moving away from that.
Yeah, and can I just mention my daughter's a designer, so I'm going to pass this one on to her as well.
You should. Here it says, more designers should be founders. Over the next decade, as new coding tools make it easier than ever before to build and ship products quickly, great design is going to matter even more. Especially as many designers are worried about AI replacing their jobs, the real opportunity is for designers to use AI themselves to launch their own products and build their own companies. The design job of the future will be founder.
And they make a really good point in their pitch, which is that if you hadn't had such beautiful design for Airbnb, and I have noticed this, we booked an Airbnb holiday in Canberra Sands earlier this year. The interface is beautiful. It really is. It's simplistic. It's got beautiful design, nice typefaces. So even if the place you're going to stay is a real dive, which ours wasn't, then you don't worry so much about handing over your money. You assume it's a professional outfit, even if it's just a wrapper around something dreadful.
Yeah, it's interesting, isn't it, how professional, sleek design can convey a kind of trustworthiness and make you willing to part with your money. Was design a real challenge for you when you were founding PensionCraft? Because you're technical, right? You're not a designer instinctively.
Oh, yeah. I mean, the website looked awful. It was a WordPress site. You could argue that it doesn't look a lot better now, but, we do our best. We do our best. We did hire some designers to redesign the website completely. But this is something that evolves over time, right? You have to spend money on these kind of things.
Yeah, allocating capital is a really difficult challenge, I imagine, as a startup founder.
Oh, yeah. I mean, you've got to be so careful because you have limited resources, certainly in terms of manpower, in terms of the amount of time you can spend on each of the different tasks. And initially, it was just me doing everything, talking to clients, making the videos, editing the videos, publishing on YouTube, looking at the stats, getting the website working. It was an absolute nightmare.
You've come a long way.
Yeah, we're still growing. Before we go on, let me quickly mention one of the drawbacks of going to a VC company, which is that you give up some of the equity in your company. You literally give up control in order for the capital to be given to you in the first place. So they get their pound of meat, of course, and they get a say in your company and pretty much drive the future direction of your company until they sell out their stake.
When you say you give up control, I mean, it depends how much equity you sell, right? Typically, you're selling maybe 10% or less, especially if you go through something like YC. As you grow, you're going to give up more and more equity to raise more and more money, probably. So you get diluted over time. But you do get founders who grow a huge company and then through the shenanigans of dual shares or whatever, manage to keep control, like Zuckerberg has at Meta.
Yeah, there are various things you can do. But really, at this stage in the company's growth, you're in a very weak position when it comes to negotiating equity. If you'd already established yourself through organic growth and you're looking for mezzanine capital, I think you'd be in a stronger position.
I mean, here at this stage, the game is getting accepted by a VC company or an accelerator like YC. That's why you've got tens of thousands of startups applying, right? If you get through the door, your chance of making it goes up. It's still a very small chance, but you've got more chance than if you were just bootstrapping everything on your own.
Yeah, I saw somebody said it's like having Harvard on your CV if YC has actually funded you already. So I can see that.
Yeah.
But that's the complaint I see about the amount of share of the company which you have to give up initially. Other than that, people seem quite positive about the funding.
And I think the mentorship and the business guidance you get around it is a big part of YC. It's not just here's your money, off you go. They do try to guide companies, I think. And if we go back to their request for startups, the next big bucket you can look at is applying AI to various different domains. So you've got AI for scientific advancement, AI personal assistants, healthcare AIs, education AIs, often focused around personal tutors. And then you've got some more esoteric stuff like
robots,
software tools to make robots.
That's a cool one.
And software to design your own AI agents, as well as like the really deep tech problems like foundational models and AI research labs. And then the very last one on their request for startups was AI for personal finance, robot Romin.
Yeah, I like the sound of that.
You're not far off it sometimes.
Yeah, I know. I mean, I find myself repeating myself a lot. Obviously, in the community, I have to do that. And I often think, look, we've produced all of this content. How hard would it be to create a ChatGPT version of myself?
I think it would be quite feasible. The challenge really is getting the data into a shape you can feed into a training set for an AI model. And you do see quite a lot of AI startups now which are focused on the data, which has maybe been a bit of an unloved part of this process. So much money's been thrown at computer scientists. You know, you saw Meta making $100 million offers to individual people to steal them away from OpenAI recently. Have you seen that? Crazy.
Yeah.
So they've been focused on that and beefing up the algorithms, coming up with these kind of clever ways to enhance the models. But ultimately, it's only as good as the data that's going into it. So startups are trying to fill that gap by gathering more data and better data that then they can sell on to OpenAI and Anthropic and whoever.
Yeah, and can I say actually that some of my clients, the ones I have for my power hours, are the ones which are being poached? Because obviously they do very well financially, but maybe the AI is not so helpful when it comes to investment recommendations. They do still need a Romin.
Okay, so I think we've covered a lot of the areas they're looking at within AI. It's all within AI at the moment. Everything from the deep tech and the foundational models to the agents to these full stack companies, the real moonshots like let's go and be the new law firm for the world. After the break, let's look at a handful of specific startups that went through the YC process recently. Not because they're our picks to be the next big thing, but because they're maybe indicative of some interesting trends.
Sorting your savings shouldn't mean juggling websites or doing hours of research. Raisin UK streamlines the whole process. With one login, you can explore and manage savings accounts from across 40 plus FSCS-protected banks, all in one place. What's more, for a limited time only, you can receive a £100 bonus when you register and fund your first savings account with a minimum of £10,000 using the code SAVINGS100. For more details, please visit the link below or go to raisin.co.uk/PensionCraft.
Okay, so now's the time to talk about some specific startups that YC has backed in the last 6 months. And as we said, there are many challenges for startups. Coming up with the idea, finding co-founders, getting funding, but significantly, coming up with a good name is always a challenge. I think this one's nailed it, and that's Anvil. Now, this is a company focused on search engine optimization for LLMs, for the large language models itself. Now, this is interesting because previously, Google and Google Search was kind of the gatekeeper, wasn't it? If you were a business and you were trying to attract customers, you had to be very clever at how you used meta tags and wrote your copy so that you ranked on the first page of Google. You had to get on that first page for your key search terms. But now we're seeing maybe some of the search traffic is going to move away from Google and people are going to be instead querying ChatGPT or Gemini or Perplexity or whatever. If you're a business looking for customers, hoping they can find you somehow, what does search engine optimization, SEO, what does that look like for a world of AI models?
Yeah, and as a business, I've been thinking about this. So I was really interested in this company because this is the kind of thing I certainly would consider doing. Because SEO is basically going to let your company grow or not. So if your content is not listed for a large language model, you're stuffed. Just as you say, if previously you weren't on Google's first page of results, then essentially you needn't bother creating the content. So as a content producer, this is absolutely critical. And I still haven't found a good tool which allows you to give it a back catalogue of stuff you've done and then suggest stuff you could do in the future, which is in your style. I think that would be a real killer app for content producers. So I think in terms of the breadth of the domain, this one's an absolute winner. Because everyone's a content producer now. Any business is a content producer, as well as traditional media companies. So I think this is a real interesting application.
I find it interesting because the criticism of Google search was always, it's a black box. They can change the algorithm at will. Suddenly I've been deranked and my search traffic has fallen off a cliff. My business is going to die. If you thought Google search was a black box, well, wait till you see ChatGPT, right? Like, who knows how that generates answers? So if you can kind of wiggle your way through the algorithm, and if someone types in investment guidance for UK retail investors, and it goes, well, you need to go to PensionCraft and Romin, that would be worth a lot, I presume.
And funnily enough, exactly that happened recently. So someone just joined our community and he said he found us via AI. So I said, what was the prompt you used? And he said, I just typed into ChatGPT, who should you listen to on YouTube for guidance on shares and private equity for FTSE in UK, and is well respected in the industry. And I came up as a number one suggestion out of 5. So I like ChatGPT a lot more now.
Yeah.
And I have noticed that Perplexity started using some of my videos in its outputs, which is also good to see. When I'm asking the question and it throws my content back at me, you just think, oh, this is a bit weird.
But as a business, if you can get ChatGPT to spit out your name when anyone starts talking about finance for UK investors, you're onto a winner, Romin. I don't know how you've ranked so high. I guess it's because your content's good. Maybe it's not going to be about the traditional forms of SEO that it used to be. Maybe it's going to be, hopefully, judge more on quality.
Yeah, and I think knowledge, a lot of people can produce content, but some people are just drawn to it because of the money, because in finance, you tend to get more money for the ads that they put in. But another reason I like this company is that the CEO, Daniel Syryakov, has a dog in his picture, which I always think is a good sign.
You're so easily persuaded. I'm glad you're not running a VC firm.
Has he got a dog? He's got the money.
This is like when Vladimir Putin wore a crucifix necklace to meet George Bush to get him on side. It's just like a dog in the picture with Romin. He does it. Here's your millions. But going back to this idea of how do you get your company to bubble up in the results from AI, what I've seen a lot of people talking about is how, as we mentioned with data sets, a lot of this is pulled from the internet, right? And the internet has been built for human eyes. It's stuff we look at, stuff we read, built for our navigation and the way our eyes move around the screen. Maybe a way in here to get a leg up on the competition is to design applications and APIs and websites specifically for ease of use by AI agents. Like AI agents will pretty soon be consuming more content, I think, than regular humans. So it's an interesting question of how do you optimize your presence now? How do you optimize your content? Do you have to produce 2 versions, one for the humans, one for the AI?
Oh, that is interesting, isn't it? If you make it more easily digestible for machines, yeah, that would be interesting. Making sure there's a good transcript available for your videos, for example. Yeah, I think all of that's really fascinating. And marketing now becomes something like feeding a robot, right? It's not so much about creating advertisements for humans. It's more about feeding the algorithms.
I guess you always had to please your algorithmic masters on YouTube anyway to be seen by anyone. But this is taking it a step further. And interestingly, with Google, this could have big implications, right? Because Google's primary source of revenue is still search and selling ads alongside search results. If we move to a world where fewer people are using Google, or at least for some types of queries it moves off Google, does that undermine their business model? Like, I know they have large language model themselves, which is very good, Gemini. But they haven't got the big economy of scale they have with Google search.
Yeah, I've already found that for basic searches, I go back to Google. But when it's something more advanced and I want an actual topic described or a bit more depth, I go to Perplexity or I go to ChatGPT. And in terms of the conversational interface, where I'm talking to a human, it's ChatGPT every time now.
Yeah, interesting. I think I'm kind of similar. I'm subscribed to ChatGPT and Claude and Gemini. I'm just trying them all in the early days.
Which do you currently like the best?
Oh, it depends on what I'm doing, right? They've all got really different strengths at the moment.
Yeah, I agree completely with that.
And they've all got loads of different models as well. In ChatGPT, you can select from like 7 different models. So that's something that needs to be fixed, right? They need to have a system where you type in your query and it knows which model to feed it to give you the best answer. At the moment, you're kind of being asked to build the aeroplane a bit yourself as you're flying it, which is just very, very hard to do. But going back to Google and their approach here, they're kind of playing offense and defense at the same time. So they're building Gemini, which is their AI offering, and it's very good. But that's also presumably a risk of cannibalizing the golden goose at Google, which is search. But then you see in search, you can't have missed it. At the top of pretty much every query you type, it's giving you an AI summary answer. And a lot of content creators are not pleased about this because you're seeing far fewer people now click on the links that they get served as a search result. Why click on the link if Google is summarizing the content for you? So some people fear that we're moving to a zero-click internet, where ultimately content just becomes unprofitable because people aren't clicking on it. They have no need to click on it.
Yeah, I can see that. And as a content creator myself, as long as I get compensated for the stuff I produce, I don't mind. But if it's being absorbed into an AI, the AI only has to watch it once in order to index the content. So I'm not going to be paid for that. So that's the worry. What will the compensation look like for content creators in this new world? And I think you still need content creators. You've got to feed something into the AI.
Even if you don't need them, even if AI becomes the content creator, I think we still want human content creators, right? It should be a thing that exists. So there needs to be an ecosystem which rewards them. We'll see where we end up. And no one really knows, right? So that's why companies like Anvil are interesting, because it's all going to change in the next few years. And there could be some big winners. Who knows who they're going to be? Anyway, let's move on to another company. Good name again, Cactus, which is AI Copilot for solopreneurs. Now, I put this one on the list because I thought, again, it's a bit relevant to you. You hate admin. There's a lot of admin, isn't there, with running a small business?
And just scooting down to their solopreneur list already, so they've already got some people on board. It's a lot of chefs, people who actually act as a chef for presumably wealthy people. Now, for that kind of person, they're a creator of food content, but they don't want to run a website. They don't want to answer the phone. They don't want to do the bookings. Of course they don't. So what this aims to do, which I think is a great idea, is to offload all of that onto a system which presumably does a good job of it. So all of that stuff I had to do on my own in the first 6 months of PensionCraft, setting up a website, registering a domain, creating the content to go onto the website, and then fixing things, all of that would be taken care of, which I think is great.
Yeah, I think ultimately, if a company creates a product that is good at just letting the founder focus on the thing the founder's good at, in your case, creating content, sharing your knowledge and talking directly to investors, and then everything else is handled behind the scenes for them without hiring a big team, which they can't afford, that company is surely onto a winner. There'll be lots of people trying it. This is just one example. Anyway, let's move on, because there's another company called Okta, which is not focused on that small business segment, but on the big enterprise software. And this aims to automate enterprise software implementation. So in a way, it's a similar thing, but for much bigger companies.
And can I just say, the fifth co-founder of this company is a golden retriever. So again, a winner in my book. It's the chief bark officer, they call it. But I think the points they make are really important, which is that when you create some kind of project, the requirements are often incomplete. It's difficult to actually come up with a spec for what you need. If you've ever had to work with software developers, you'll know this. You feel as if you've essentially written the app yourself anyway.
Don't tell them that. Don't say I've written the app for you. Here you go. Good way to get them on side.
But But all of this process of creating software, which is having the spec, coming up with the ideas, and then the refinement process, which is really painful, a lot of that can be faster and more efficient, I think, if an AI is involved in it.
Now, there were quite a few companies in the YC startup batch that were focused on very specific problems and solving them with AI. So you've got Moby Analytics, which builds AI agents for financial auditors. Now, I think auditing is a business that is ripe for AI agents because a lot of it is rules-based. Like there's the law and there's the accounting. Those things should be rules-based, we hope. And you've got to check the company's following the law, following its own processes. And obviously, there's definitely a role for humans because a lot of the edge cases involve talking to the staff, working out what's going on, doing that kind of forensic accounting. But the kind of bog standard bit, like maybe the 90% of the audit, is presumably ripe for automation.
And what I liked about the CEO of this company was that they used to work at PwC and they were pushing the idea of audit digitalization. So this is someone who's actually seen it from both sides and is quite likely to know what the problems are, but also the solutions and the dangers of automating auditing.
Yeah, auditing is one of those businesses I would never want to work in because it's the kind of thing where you never get the credit if you do a good audit.
Yeah.
Like the company's flying past its audit, no problems here, no one mentions the auditors. If the company goes bankrupt unexpectedly, immediately everyone goes, well, what did the auditors miss?
Or if there's massive financial fraud, again, it's so hard for the auditor to work out what's going on, particularly if you've got really good accountants working for the company itself who are good at hiding the bad stuff.
But this is the kind of company which makes me wonder, how far can we really take AI? Not from a technical point of view, but from the point of view of accountability. When something goes wrong, regulators want to point at a person and say they were responsible for that audit. They screwed it up. If that person can then go, well, I wasn't doing anything. I pressed the button, sure, but the AI did everything. Go and blame this AI company. Like, how do we have accountability in a world where AI agents are taking on more and more responsibility?
Maybe it'll be like a taxi company which has autonomous cars, where ultimately the company itself will be responsible for the kind of accidents or damage caused by its vehicles. In this case, it would be the company, Moby Analytics, which would be responsible for any screw-ups on the audit. But I think there's a broader point here, which is that the job of an auditor is to get repeat business from the companies.
Yeah.
And if it pisses off those companies, then that misalignment of incentives, which is to get repeat business and do a soft audit, if you like, is still there for the AI. And I wonder if the AI would work that out. If it was really clever, it would know. Okay, there's a little bit of dodginess here, but shall I just brush it under the carpet? Otherwise, they're going to switch me off.
Yeah, people talk about the alignment problem in AI, but they're more talking about the fact that how do we build them so they don't kill us all? But yeah, in the specific case, it's, how do we build them so they don't allow another Wirecard?
But do you think that could be another application? Really good fraud, well thought out and executed.
That will be a widespread application of AI, but it won't be founded by YC. I mean, all of this discussion about accountability and responsibility when it comes to AI makes me think there's a business opportunity for a company which provides scapegoats. Like, we'll give you a human. When the AI goes wrong, you can jail that person. Scapegoats as a service.
It would have the right acronym, wouldn't it?
Okay, let's do a few more companies that I found interesting. Here's one where they didn't put much effort into the name, which is LLM Data Company, which I just like how on the nose that is. But they're in the business of building tools to evaluate AI models and agents themselves. Like basically say, is this doing what it's meant to do?
I think that's great because let's say I did want to create my own agent. How would I figure out how good it was based on the content that I give it, how accurate it is and whether it's performing well? So having some kind of framework to do that, an app that does that for you, I think that makes a lot of sense. And a lot of companies are probably going to try and roll their own AI anyway. So not having to buy the expertise for that, using an app for it, would potentially be quite useful.
I think they are already working with companies like Perplexity to assess their new models. And as you said, if someone's building their own AI, then you need a process for assessing how good is it, objectively and compared to the competition. But also, if you're buying an AI off the shelf, you need to know that you can trust it. And you probably don't just want to trust the claims of the model builder. Now, moving on, there were some startups more in our wheelhouse focused on finance and investing. So there was Scale of Field, which is an AI-powered Bloomberg terminal, effectively. Not literally a Bloomberg terminal, but one that's trying to put Bloomberg out of business, I guess.
And initially, I was really excited by this one because any kind of Bloomberg replacement, I really miss my Bloomberg terminal. I'm always moaning about it. But what they're trying to do is to create agents that react to market events, run back tests, and maybe even trigger trades. So there's a kind of agent approach to it as well. Now, the back testing stuff I think is quite good because it's a difficult thing to do, to get the data together, to clean it up, and then do the back tests and look at the results. So if it could do that, that would be great. I'm not so keen on actually doing the trades via an AI because it's a little bit like the Sorcerer's Apprentice, where it goes off and really screws things up.
But I think we can agree that Bloomberg terminals are ripe for disruption. They're expensive. They're not very user-friendly, are they? Their strength really is that they have all the data and a big moat from that.
Yeah, it was a real street cred if you knew how to use the Bloomberg terminal in the investment banking world. Just navigating the pages was a skill in itself.
Yeah, but it shouldn't be that, should it? That shouldn't be how a terminal works. It's like a taxi driver being reliant on the knowledge in their head. We've got GPS now, right?
That's right. But I think a lot of people don't know how to do backtesting or indeed what the backtests mean, interpreting the results, how much credibility you should give to a backtest, and how important the length of data is in assessing an individual test. Running things out of sample, another thing which people often fall down on. They overfit horrendously on past data. So all of that, if there was a better framework for it, I think that's a positive. But the thing to remember about Bloomberg is they're very innovative themselves, and I'm sure they've got some AI which they're going to integrate into the Bloomberg terminal. They've already got the data, that's the point. So taking that data and applying it and analysing it better is something which is absolutely in their wheelhouse. And let's face it, they've got unbelievably large amounts of money. So doing everything in-house is probably going to keep them as a class leader for years to come.
That's an interesting question, which is going to come up again and again as startups founded with AI at their core challenge existing businesses. You'll have these giants like Bloomberg, like Google, who are massive, which is both a blessing and a curse, right? You have economies of scale. You have a lot of cash probably, which you can use to try and put companies out of business or buy them up before they challenge you. But you've got all these sort of archaic processes maybe built in there, staff who don't want to be displaced. It's really hard to disrupt from within inside, I think, which is why you don't often see companies stay at the forefront of their field for, like 50 years. It's very rare that happens. Now, just a couple more companies before we wrap up. So there was one startup focused on financial markets themselves called QFEX. And its pitch is basically, we're going to build a 24/7 stock market. Now, this is a kind of trend we're seeing from the traditional players in the market at the moment. I saw a story in the FT over the weekend about how the London Stock Exchange is considering going to 24-hour trading. And we've seen the same in America. So the New York Stock Exchange and the NASDAQ have both applied to the SEC in recent months to extend their trading hours. But we've got this new startup coming in saying, we want to do that. We want to do it faster and we want to cut out the brokers.
So this was started by a bunch of maths graduates who are at Cambridge. So they've certainly got the intellectual firepower to do this, and they've been involved in finance in their careers, so they are well placed. What I'm slightly concerned about is it's very much going down the gambling route. So short-term trades, having 24-hour markets so that you can trade actively 24 hours a day, great. And of course, they talk about leverage, which I'm not particularly keen on, as many people will know. So just reading through the bullet points of their business, you can trade 24/7, you can get greater than 20 times leverage or avoid margin fees. So is that a development which is positive for most retail investors? I think probably not.
Yeah, but as a VC, I'm thinking, is it positive for my company's profits? We've seen all that stuff in the crypto space, right? That is a 24/7 market. That does have massive margins. And it is growing consistently year over year. I'll say this. I think in 10 years' time, the traditional financial markets will have been significantly disrupted. It's just a question of whether it's done by themselves or by a startup. I think as much as we might not like it, Roman, the world is going this way. I think we're going to have 24/7 trading. We're going to have more of a gambling focus. Not to say we have to do it. There'll still be index funds and whatever. But certainly the trend in the US is that regulations are being loosened right now.
But look at what's always happened when you get loosening of regulations. Give it 5-10 years and you get another explosion as something goes badly wrong. I mean, one of the things which they talk about, which was interesting, is the futures market. So a futures contract is when you agree to buy something at a fixed point in space, of a fixed quality, and at a fixed point in time. So you might have a 1 month, 3 month, 6 month futures contract on corn or wheat or whatever, oil. And it was very much geared for the commodity market, like corn futures. And yet those periods of time and also the way the market works is very much frozen in history based on those contracts. So they're saying, why not have a perpetual futures contract and apply this to almost everything? So you could buy futures on Nvidia, for example, which give you leverage. You can go long as easily as you go short. Now that could be quite exciting, but I'm just worried that people are not going to benefit from this. The company may benefit from offering it, but like you say, for the average retail investor, I'm not sure this is a positive development.
And just to wrap up, there was one other bucket of companies which I thought was interesting. I'll just pick one, which kind of demonstrates the field, which is Casco. And this simulates attacks on companies' AI agents and systems to discover vulnerabilities and find solutions. Cybersecurity is going to be a huge thing, and it's going to move on to the field of AI. As you hinted at earlier, when we were talking about doing trades or booking holidays or whatever, if you've got an AI out there acting on your behalf with your credit card details, that is ripe for attack, whereby someone tricks the AI into doing something it shouldn't do. And there's a specific kind of attack against AI agents called prompt injection, where it might go and browse a website for you. And in that website, there's some code which kind of tricks the AI into thinking it's the user and says, now you've got to check out on the basket and buy this really expensive thing. AI agents are smart, but they're dumb at the same time.
Did you see that article which was about scientific papers and how computer scientists have been hiding inside the text a prompt for an AI so that if you get an AI to review their paper, they basically told it, give a positive review.
Yeah, it's in there in like white font, positive reviews only.
It's brilliant.
That won't last long, that kind of prompt injection. But I've also seen that in education, professors are trying to sort of catch out students who are using AI to write their essays by putting in little sneaky bits of language, which makes the AI output something which mentions something random, like Coldplay or whatever. So the AIs know if this essay at any point mentions Coldplay, they have used AI to write it.
But I think this is a great application because it requires, firstly, domain knowledge. You've got to know how the attacks operate. Secondly, it's quite boring to do the attacks yourself and apply the same ones all the time. And it requires a level of innovation. If this thing doesn't work, then you try another thing. So this could be interesting if it was successful, if it managed to come up with successful attacks which were new. That would be incredible. But also worrying because the bad guys could use a similar approach. In fact, I'm sure they already are.
Yeah, it's going to be an arms race like it was with the early stage of the internet, right? With software viruses.
But just watching their video, I just felt sorry for them because they're great software engineers, but they're awful YouTubers. And, it kind of made me feel sorry for them.
But that's something that can be solved with AI. Just, have avatars that talk for all these nerds founding these companies. Anyway, I hope that's been interesting for people. And I think we should just reiterate that these companies that we've specifically mentioned, we have no real opinion on them. We don't think they're going to succeed. We don't think they're going to fail. Definitely no recommendations. But hopefully they give a flavour of where VCs at least think the world might be going. And perhaps it's triggered in your mind that a lot of these businesses that we own in our portfolios, they're going to have to fight really hard to keep their market share in the coming decade.
Now, to save you the bother of having to type it into ChatGPT as a prompt, why not join our community directly? If you want to learn more about that, just go to our website, pensioncraft.com/membership.
Okay, today's dumb question of the week. What is a unicorn?
Well, this is a company where it's a startup And it goes from a market capitalization, which presumably is zero initially, to a market capitalization of $1 billion. So that means the number of shares times the share price is $1 billion.
Or more.
Indeed.
And this term was coined in 2013 by a venture capitalist named Eileen Lee. And the basic point was, obviously, unicorns are mythical. Sorry to break it to anyone. But it was meant to indicate how rare it was for a startup, a privately held company, to get to a valuation of $1 billion. At the time she coined the term, 39 companies were identified as unicorns. Now, today, there are many, many more, partly because $1 billion is worth a lot less than it was 12 years ago, but also because companies are staying private longer. So they have more chance to reach $1 billion without hitting public markets. Today, there are more than 1,200 unicorns around the world.
Yeah, it's not a big deal anymore to make $1 billion in the markets. So nowadays we're talking about things like decacorns. So that's $10 billion or more market cap, hectocorns, or even centicorns, which are worth $100 billion or more.
I always think it's interesting, the valuation process for these private companies, because it tends to be more sort of blocky, doesn't it, than on the public markets. If something's listed on a stock exchange, you can see its price every second, at least while the markets are open. But for these companies, they tend to raise money in rounds, like funding rounds every so often.
Yeah, until it floats, you don't really know. But, people estimate this stuff. And presumably the venture capital companies are now pretty good at doing that.
Well, you kind of know, like when they're selling equity at a certain price, you can multiply it up and work out what the whole company's worth. Whether they could actually sell the whole company for that amount, who knows?
Yeah, this is the important point. It may be that the venture capital companies are just a little bit too credulous.
There is one term I've heard thrown about, which is quite relevant to this episode, which is that of a soonicorn. Now, a soonicorn is a startup that's growing quickly and has the potential to reach a market cap of $1 billion in the near future.
It's interesting. The metric of success is always how much it's worth on the open markets. It's never about the positive societal impact, is it? It's never, this thing has transformed medical care or made people's lives better in some way.
And on that hippie socialist point, we must leave you. Happy investing. Thank you for joining us for many happy returns. Keep sending us your questions, no matter how dumb, at mhr@pensioncraft.com.
And do remember to check out PensionCraft.com for all the information about our membership, courses, and investment coaching options.
Many Happy Returns is a PensionCraft production, co-hosted and executive produced by Roman Nakiza and Michael Pugh. This podcast is for informational and entertainment purposes and is not financial advice. We do not provide recommendations or endorse any decision to buy, sell, or hold any security. We cannot be held responsible for any actions listeners may take, and investors are encouraged to seek independent financial advice.